Good morning. Welcome to Personal Finance. Good to be able to communicate with everybody by voice. We're going to be doing this much more frequently, if not on a daily basis. But thanks for hanging in there, everybody. Thanks for being so cooperative. I think things have gone extremely well in terms of assignments and communicating assignments and people turning them in. A few folks took a few days to get adjusted. This entire week has been a week of adjustment. We understand that. So almost 40 years of teaching, and this is the first time I had to teach like this. So it's a little bit of adjustment. I learned a lot, and hopefully I can improve how we can learn together. A few things. A few items came up, a few questions. Feel free to question as we go along. You can question immediately on the stream, the Google Classroom stream, or you can send me an email on any of those questions. I'm trying to figure out the best, most convenient way to communicate. It seems like Google Classroom is working best, but if there's a problem, you can always email me, right? L Hughes, right? That's Lawrence Hughes at, and then paramus-catholic.org, right? Most of us, Catholic.org. All the teachers have something to that effect, right? L Hughes at paramus-catholic.org. So feel free. I just realized maybe my screen is a little low. Oh, I see, because it went down a little bit there. How's that? Can you see? Does that help at all? Maybe a little too high. Let's see if it just shifted on me. We'll just make that a little adjustment, a few comments. Okay. So I'll just make sure I write a little bit lower there. Okay. 312 I wanted to talk about just a little bit to get us started. Okay, describe payroll tax and the difference between payroll tax and income tax, and most folks equate the two, but when you looked it up, probably payroll tax, they talked about Social Security tax and Social Security and Medicare tax, and Medicare taxes as payroll taxes. Now, for the most people, including me, I think of the federal income tax that they're taking out of my paycheck and the state income tax that they're taking out of my paycheck. I think of those as taxes as well, because they're taken out of my paycheck. But by the strictest definition, they're talking about Social Security and Medicare with regard to payroll taxes. And the second question down on Q&A 312. What is described as income taxes, federal, state, and local income taxes. Now, income taxes are not are distinct from payroll taxes only in the sense that you're going to pay income tax on all of your income, not just the income that you earn from your one particular paycheck. And we're going to talk about that in a little bit, because on the back of 312, they talk about the various types of taxes that are out there. And the first one there is the U.S. federal income tax, and the purpose is to raise money for the U.S. federal government for a whole bunch of reasons, to subsidize all sorts of states and various programs, obviously huge chunks of money going toward military in the United States, and federal programs and education. So there's an awful lot of money that has to be, and that's almost a course in itself. But our federal income tax, the U.S. federal income tax, is a progressive tax. I'm incorporating a couple of the Q&As here. It's a progressive tax, and when we say a progressive tax, we mean that as you earn more income on a progressive tax, you pay a higher tax rate. And in the federal government, the current U.S. system. There are tax brackets at 10%, 12%. I mean, I can keep going for quite a while. 22% tax bracket, a 24% tax bracket. There's a 32% tax bracket, and 35 and a 37. And that gives you some sense of what a progressive tax bracket system is like. So depending upon how much income you make, maybe it's only all going to be taxed at 10%. But again, this is something that we're going to develop a little bit more with a problem. But once you earn beyond a certain amount, now I'm just going to round numbers. The first tax bracket, if you have taxable income between $0 and $10,000, you'd pay 10% tax on it. Now now again, I'm rounding for example's sake, from $10,000, we'll say, to $40,000, the income in there is going to be taxed at 12%. Now it's going to depend on your filing status and a few other things. But that gives you an example of the U.S. federal income tax structure and the progressive tax structure and why it's so complex. If you have taxable income for $10,000, you're only going to pay 10% on that, which is $1,000. Now, if you earn up to $40,000 of taxable income, not all 40 of it's going to be taxed at 12%. Not all 40 of it's going to be. Only the amount between $10,000 and $40,000 is going to be taxed at 12%. And that's where it starts to get complicated and become more of a math problem. I think Monday we'll do a problem similar to this. So only 12% of the amount between. So that's 12% of $30,000 is in this bracket, 30,000. So 12% of 30,000 is $3,600. And so now somebody that has $40,000 of taxable income pays $3,600 plus the $1,000 that they earned in the original bracket. So that's one of the reasons why our tax structure is so complicated. Unless you're schooled in this area, you can see that can get very complicated, and that does not include all the various deductions, allowances, credits, and all the subtleties of the tax law, which is thousands of pages. So you might say, well, how can an average person understand it? Well, I think we can understand the basics of it, and that'll get us pretty far. When it comes to real technical questions, I think that's when you're going to need a professional in there to help you out. Okay? And the next question down is the New Jersey state income tax, which is also a progressive tax. It's also a progressive tax system, and it starts with brackets as low as 1.4% and goes up to almost 9%, 8.97%. Again, depending upon how much income you have, it's going to be taxed at varying rates from 1.4 to 8.97%. And it's a similar progressive tax system as the federal government tax. And again, kind of complicated, and we'll see maybe a problem again we'll have an income problem. I'm not trying to make it an accounting course, but it's good to have a sense of how that works. It is interesting how some folks have no idea how that works. Now, originally we said payroll tax, Social Security tax. The Social Security tax is currently 6.2% of your income, 6.2%. And that goes to the Social Security program, funding disabilities and some help programs, but primarily concerned about more or less people think of it as a national retirement program. And 6.2% of your salary goes toward Social Security. 6.2% of your taxable income goes toward Social Security, which is a big number. The flip side of that is the employer has to match that number and submit it to the U.S. Treasury. So you're talking about 12.4% going to into your account in Social Security. Social Security is a separate question entirely. Again, almost within a course of accounting, we could talk about these things. Then there's the Medicare tax, and that's 1.45%. And these are the two that are considered payroll taxes. Okay, the Social Security tax and the Medicare tax. Medicare program primarily, again, for folks with disabilities and unable to generate income. They can lean on a Medicare tax, a Medicare system. Primarily, it funds, assists in health care payments and health insurance for folks that are 65 years of age or older, which is really a tremendous help, because at 65 years of age, that's when there's more likely to be health problems, and private health insurers would have to charge you an awful lot of money to try to insure your health after 65 years of age. But this is a program that's federally supported, established, and helps take a lot of the burden off of the health insurance business, is the Medicare tax. So that gives you some sense of some of those taxes that are there. The next question that we had, it was really on 316. On 316 was why is April 15th? And that's coming up. It was actually just moved. It was moved back, I believe 90 days. I could be wrong. But that's the day you file your federal tax return. You have to file your federal tax return. And I just want to comment on that. And I'm going to emphasize the word return. And it goes along with really the second question there about reconciling taxes, because that's really what's happening here. That's what's happening on April 15th. You are not truly paying your taxes on April 15th. You've paid your taxes all year long. When you work, you see those taxes taken out of your paycheck. If you are run a business for yourself, you have to remit quarterly estimates. Every 3 months, you submit taxes estimating what you think you're going to make for the year. So what we're really doing all year long is paying our federal income tax every 2 weeks or once a month, or in some cases every 3 months. We're filing federal taxes. Now, what happens at the end of the year is that we reconcile our taxes. What we do is each of the employers that we've worked for, or any of the work we've done on our own, it all goes onto one form, a 1040 form. All of it goes onto the federal tax return form. 1040 is one of them, but let's keep referring to it as 1040. And you put all of your income. See, the employer that you may have a full-time job with does their best possible guess on how much taxes they should take out. They just do their best guess. They don't know how many other jobs you have. They don't know what other type of income you have. So they can just make their best educated guess based on what you earn at that particular job. Okay? They don't know about everything else. Well, this is where you come in when you file your federal tax return somewhere before April 15th, the end of a year up until April 15th of the following year. And it's up to you to compile all the information, gather all of your own personal information in terms of income and other kinds of things like deductions and allowances or credits that you may have. Those of you interested in accounting, those phrases will come up. And then what happens is you put it all together on one form, the federal tax return. Okay, and for the most part, we're going to call it a 1040. There are other variations of that form. And what you do is you reconcile your taxes. You're reconciling them. You're figuring out how much you paid, how much you paid in taxes, right? Versus how much you should have paid. And there's the difference. That's what this tax return does for us. You put it all together and you calculate, well, this is how much actually was paid to the U.S. Treasury. This is what was paid, taken out of all my paychecks, what I paid during the course of the year. And now when you put it all on this tax return and you do all these various, you add up all those numbers, and you have some deductions from your income that allows to make your taxable income lower, okay? And then you calculate how much you should have paid based on what you earned. And here's where it comes in. Do you owe or do you get money back? Okay? If you paid more than what your tax return says you should have paid, if you paid more, you're going to get a tax refund. Tax refund. So when you hear people saying they're getting money back, what they did was they overpaid on their taxes during the course of the year. If you paid less than what you should have paid, if after doing all your calculations on your tax return, you paid less than what you should have paid, then you owe the government money. Then you have to write out a check and pay them. Okay, so that's where people say, oh, wow, I owe taxes this year. All of us that have income, for the most part, are going to owe taxes. But when you hear someone saying, well, this year I owed a lot in taxes, that's what they mean. They probably paid taxes as they went along, but they didn't pay enough. So by April 15th, you file this form, and it tells you, well, you still owe us money. So send us a check, and we'll be squared away. All right? Just a little bit of my first dabble into explaining this on a video, but I think we're going to follow up a little bit more with this, not trying to make it an accounting course, but those of you thinking career, and we've had some questions about careers and passions for particular careers, but some folks have mentioned something regarding majoring in finance or accounting. This is an entire area of accounting, an entire industry, tax returns, and it's something you would consider if you think this kind of thing appeals to you. Okay, so we'll talk about it a little bit more. Have a good weekend. There's no homework per se. Today's classwork is essentially just to review a little bit about taxes and tax returns and some of the terminology, and on Monday we're going to follow up with a little bit more of it. Okay, so I appreciate again everybody hanging in and cooperating, checking in with attendance, saying yes, that you're present, and then completing the assignment. On something like this, I may ask you to respond to say that you saw the video for the classwork, but that would be it for today. And do your best, stay safe, and have an enjoyable weekend.